Hi, good morning, everyone. Can someone hear me?
Good morning.
Yeah, that sounds like Osinachi. Good morning, Osinachi.
Good morning.
Yeah.
Uh,
Can you hear me?
Yes, sir.
Yeah, perfect. So something is happening. That's why we quickly change the topic, and the essence of this thing is to make sure that all of us make money. And the pattern of our teaching in our school is to make sure that we help you to identify potential opportunities and assist you to maximize them. That is the major essence of our teachings. Additionally, in exchange where we trade and the company we use, there are a lot of opportunities that has been added, which we want people to also know how it works. We make it free so that those of us who are probably can't afford to pay our fee in our trading school can also participate in it. And also those who are probably trading may also participate. Those um, who have not really probably have ended their training with us, but they are trading. So it's our duty to also make sure that we keep updating you guys. But believe me, it's in all this kind of teaching that you get value. That's when you get some certain level of information that you will use to make big amount of profit. It's not necessarily for in training, because the essence of all this is to make sure that you identify opportunity that can help you get money. It's as simple as that. So we will make it quick and sharp because it's also streamlined on different channels which we are using to reach out to people. And those in our office, I believe you guys are also having the same value in those in our office. So we are discussing strictly on how you can participate, how you can make money through the oil market. So we're discussing how you can make money through the oil market. A lot of things have happened in the market, but for the sake of those of us who are here, who are just new, we have about 10 of them. We will give you a recap. I will not share a slide with you. I will only show you the trading platform, how it works, but I will explain to you from my own end here what the future market is all about and difference between the future and CFD and how you can use it to hedge your positions and how it works. This morning I was in an executive meeting with some of our team members. So, a lot of people don't actually know. They asked me to also let you guys know that the thing with trade is actually very unique, that even though the broker close, like the exchange, the dealer or the broker you're using to connect to the exchange close down, you can still go back to the exchange and also get your positions. Unlike OTC, or unlike OTC or direct derivative, you may not be able, if your OTC broker close, you may not be able to retrieve your position because those positions are open on OTC platform. But position open on exchange is like when you have your crypto with you. If your crypto exchange close and you have your product key, yeah, it's called product key. Yeah, if you have your product key, you can be able to also retrieve your crypto. That's a similar thing that happen on exchange. Then I want to share my screen, my platform with you now, so that, just pardon me, let me get. Asking question, is there anyone here who is new to trading, who doesn't really understand what trading is all about? Can someone indicate? If you are new to trading, you don't understand what it's all about, you can indicate. I'm new. I don't know anything about it. I'm familiar with some name here. I saw Tomitobe here.
Yes, I'm new here, sir.
Okay. Who else is new? If you can't talk, you can just type maybe on the chat group. I'm new.
Yeah,
I'll be able to know that we are new.
I'm new here, sir.
Okay. Izuchukwu Okafor is also new. That means you guys actually. So, okay. I see that quite a number of people are new. You are not able to understand. So, but that is why we give you introduction. Then we share the screen with you. Somebody on our Instagram also say that they are new. They are not able to understand. Okay. People on the YouTube is also on LinkedIn. Okay. I can see quite a number of people are new. Okay, first of all, what is future trading? Like the future market, I'll be able to explain to you the differences between future and CFD so that you know their differences. Basically, we focus more in trading crude oil futures. It's part of other commodity market that is available. But oil is one of the most liquid assets that we trade. We still have gold, it's part of commodities we trade. But there are different asset classes that has different fundamentals. Now, in crude oil trading, it is basically traded or is under on future or on CFD. You can also trade it on a spot. But on the future market, they are classified as a standardized contract to buy them or sell them, but you sell them at a particular price. Similar thing with when we trade on CFD. Just like every other market where you trade them at a particular price, but you have to select a particular date when you buy at a particular price and at a particular date. The date is not necessarily selected by you, it's actually fixed by the exchange when the contract is going to expire. Just take note of these things when the contract is going to expire. And there are two major exchanges where it is being traded. One of them is New York Mercantile Exchange and the Intercontinental Exchange, which is ICE. These are the two major areas where you can actually trade this market. Also, the minimum contract you can have in oil is 1,000 barrels. That is the minimum contract you can have. But on a CFD level, or you could also be able to access to what's called loss size, or let me use the word reduce contract or reduce volume. But on a future level, you can only trade minimum 1,000 barrel. That is how the contract is standardized. Do you know in forex trading, the standard volume or the standard size of trading is 100,000. How many of you is aware of it? It's 100,000. That is the standard. 100,000 is the standard. That is the minimum standard contract. But in oil, the minimum standard contract is about 1,000 barrel of oil. This note is quick. Within 5 minutes, I should be done to sharing the note with you, to telling you. Now, in trading, there are two things you need to know about those contracts. One, it has a expiring date, but on a digital trading, when the contract expires, it renews automatically. Some of you that are trading with us, if you check your platform, you see that there are some charges that comes in. If you check your history, you see that it will show you like rollover contract. That means that contract probably have expired on exchange, and the broker roll it over and charge you for rollover. And there are some certain factors you can that influences the market. I'm just talking about those who are new. One of the major factors is the supply and demand ratio in the market and the geopolitical factors, geopolitical events. They actually influence the market. And also you can trade it on a margin. Margin means small amount of money you can use to open it on a big amount, or small collateral is required that usually maybe 5 to 10% of your contract value, maybe what you need. Those of us who are trading, you may have maybe to discover that anytime you place a trade, a portion of your money is taken to open that trade. That is called margin. So the major people who participate in this business are me and you, speculators, who speculate for profit without intention of taking physical delivery. Then another people that make more money is hedgers. They come in to trade and hedge against, they come in and lock in a price and also hedge their business or their trade. So example is like airline, they come in to hedge against fuel cost, all these airline companies. And hedge fund managers and the big trading firm, they come in the form of hedging their trade and ability to make more profit. Speculators some speculator doesn't have enough capacity to hedge. They just put in their own account and trade. Then you can buy them and you can sell them. At times, or most times, you don't need to buy before you sell. Even if you have an account, you could first of all have a sell order before having a buy order. Why? Because you're not looking for who you will buy from or who you will sell to. Two direction of trade are open. So you could go short, you could go long, which is buy or sell. Then someone will be asking me, those who are new, how do I sell why I have not bought? You are trading it on a stock value. The price is what matters a lot, and that is the advantage of trading. You are not looking for a customer who you buy from first and hold the asset before you sell. In a physical commodity, you need to go and buy the phone. When you buy the phone and you see a customer will come in, you say, but in a stock trading, you may most likely sell without even buying first, unless if you're dealing on a product that does not have short and long position, that has only long position. For example, in some crypto exchange allow short position. You can only buy crypto. If it goes off, probably you can sell off to make your money, but you cannot take a sell position in case the crypto price drops, so you make money. So the sell position in the business, when the price drops, those who are holding a sell position will be making a lot of money. Example is on oil that came down from $75 to $66 per barrel. Those who are holding a sell position have made a lot of money. Then how to make profit? How to make profit in the market? How to make profit in the market is very important. How you can make profit in the market, for those of us who are new, how you can make profit in trading? One, you make profit from profit rising. From profit rising. So when the profit appreciates, goes on, when the price goes up, then you make a profit. So example is currently now the price the price came down to $66 per barrel. So if you buy at $66 per barrel and the price appreciates to $75 per barrel, then you make a good amount of profit. Then if you but when do you buy and when do you sell the market? One, or when to buy or when to sell. One, when there is a very minimum low price, at a very low price, if you buy at that time, you make profit. And the example is this hour. Why we call for this meeting? The oil price is good to buy. We believe that it's good because the price is very much okay. There are other factors that you can decide, you can determine when to buy and when to sell, such as rising demand, when there are much level of demand. Then supply disruption, when there are shortage of supply, then you can buy. Or OPEC production cut, when OPEC decide to cut production, then you can also assign. But the most important time or important factor you need to look out for if you want to buy or sell instrument is looking at buying them at a lower price and selling them at a higher price. There are different stages of low price. Those who are following us, we have given the first entry, given second entry. Then we recently give last entry now, another third entry, which is not the last one. We have another fourth entry for those who are buying to know whether they can be able to pick up a particular potential trade that can give them profit. The price suddenly came down from 75 to 66, which is a very huge price difference for buyers to have more opportunity to buy. The same thing could be said if the price goes very much up beyond what we expect. It will present another good opportunity for sellers. Then when also can you make profit or can you sell the market? One is also when the price is very high. If the price of oil is very high, you sell it at that price, you make good amount of profit. It's as simple as that. So the strategy you need to grow with us is one, to grow a strategy of identify potential low price and potential high price. I made a statement, people who are looking for a specific signal to tell them the exact time to buy, exact price and exact stop loss or take profit. Sometimes it does not really sometimes it does not really play strong effect in the market because the market dynamics does not really give that warranty or does not even warrant such kind of participation. It will make you sometimes even to be sad that probably the people who provide a signal didn't work. But it's easier to identify a particular zone, a particular area which you could be able to place a buy trade or place a sell trade. Do you understand? So these are the potential things that you need to know. Those who have studied what we call pivot point calculation, you should believe it that we have entry 1, entry 2, entry 3, entry 4. The same way we have it on support 1, support 2, support 3, support 4, or we call it resistance 1, resistance 2, resistance 4. There are zones you could be able to buy, zones you could be able to sell, and you make good amount of profit. It's not easy or very much specifically correct to give you a precise time or a precise point that the market must reverse. No, but you can find a zone, an area. Psychological, some of us want it to be like that, but it can be difficult to get it accurately. Now, when you place a trade and your trade closes at loss, sometimes it does not mean that that trade is not correct. It could be a very good trade, but based on how you set your parameter, you close at loss. That one shouldn't give you maybe the zeal to change your trade position to go into buy. For example, let's use example. You place a sell and the market keep rising. Probably you have potentially identify an area which you can be able to sell, but that particular price may not be at a point where it could reverse, and it can be difficult for you to know the exact price because market fluctuate, market wave. So if you place your first sell and it did not make profit, you could also hold on to know whether you can be able to place your second sell or obviously your third sell, and you have chance of making profit. Those areas being consistent and sticking to a particular pattern helps you to be profitable in trading. Now, it's one of the best commodities so far because there are news which you can use to help you navigate the market, and it's not too speculative like forex. It's something that you can easily do without having so much analysis to do. For example, okay, let me give you a little bit scenario of how you can make profit in the market. Let's assume the price of oil is trading at $80 per barrel. And and you are holding a contract value. This may be complex for you, but just take note of it. And you are holding you place a buy on a contract value of $80,000 and the price moved. This $80,000, take note, in CFD trading, you may not need to have all the $80,000 to place the trade. So your lot size have been standardized to represent a particular amount of money you are using. For example, if you are using one lot to place a trade, it's actually $100,000 value. Then if you are using if you're using one lot to place a trade, I think actually $10,000 value. If you're using 10 lot to place a trade, it's actually $100,000 value. And the price moved from the 80,000, which is from and the price moved from that 80,000 to 85,000. You have made a $5,000 profit. Because obviously you have made about 500 pips movement. Yes, 500 pips movement, and you are holding a standard contract of let's say $10. So if you multiply it by that, your profit then have become $5,000 profit because of the contract you're using. I will show you from the chart so that you won't be confused. I've discussed it with you about factors that affect the market, supply and demand, political event, and the economic indicators such as growth and inflation and open decision. But the most important three factors you need to consider when you want to trade is this one: supply and demand, geopolitical event, and the open decision, including buying low and selling high. These are the things that will help you to understand how you can trade oil successfully and make good amount of profit. Now, there's opportunity we have in oil. That's why we call the meeting. So I'm going to share the screen with you so that we can be able to deliberate on it and know whether it is suitable for us to trade this market or not. I was trying to share the oil future screen with you, but it's loading gradually. Instead of taking much time, let me share the CFD future CFD screen, because I have the two screen. I have the two platform here. The platform which you trade future is different from the platform you trade CFD, but they similarly look alike, but they are not the same. Take note, the platform look alike, but they're not the same. Even MT5 have upgraded now. The MT5 has launched the MT5. You can be able to trade CFD futures through MT5. Many exchanges have started adopting it to trade. Now, who were with us when we made this analysis? I don't know whether you were with us last week Thursday. We did analysis. When we made this analysis on oil. And we made this analysis again too on USDJPY. So on oil, this was our analysis, and this was one of the trades that we placed then on oil. This is the price of oil. Now, the price is currently trading at a very low price. As I speak to you, the price is at $68 per barrel. It came down to almost 60. It came down to almost, let me check the last price, 65. The lowest it has always been since 2021. This was lowest since 2021. Let's go to the monthly chart so that you can see what I'm saying, showing you. Then after this meeting, you now reason with me whether it worth trading or not. Yeah, since 2021, this is 2022. The lowest it has been since 2021. Yeah, this is 2021. Here, if you check here, I'm sorry. Okay, let me go on monthly chart so that we see what was the lowest so far. The oil came down to the lowest so far. This is 2019. This is 2021. So let me check what price was here. Here was $62 per barrel at 31st December 2021. Let me check here. Here was yeah, here was 2021. So the price came down to this point in 2021. Now the price is currently there, here. And now here is the current price at this point of oil. And in this area is what to call a very strong base in oil. So after now, the next base we are going to expect in oil is within this point. Remember, it's a high volatile asset. Then we experienced a bearish trend because of one thing. There was speculation that OPEC production cuts won't be, that OPEC is planning to end production cuts. That was one of the reasons. There was not much news. Check the news. The OPEC was planning to end their production cut. However, they have extended it to December. But the price seriously crashed. The price came down from this price from $75 per barrel down to this point, which is $65 per barrel on a WTI. And on Brent crude, the same thing also happened on Brent. So if I open a Brent crude for you, you also see that Brent came down below $70 per barrel as well. Brent, yeah. Let me open Brent for you. Brent came down to $75 per barrel. Yeah, Brent came down to below $67 per barrel, while WTI came down to 65. This is the lowest it has also always been. Within the EU zone, the minimum trade benchmark, for their budget is $62 per barrel. And if oil price is trading below benchmark, it poses a high risk to those who make their budget using the crude oil, which oil is one of the major commodity or major source of their energy. Now, let me ask you, House, what do you think about this price? Is it a good price to buy based on the note I just gave to you, or a good price to sell?
Hello,
I'm
everyone.
expecting an answer. Yeah, I just
Hello.
asked a question.
Yeah,
Yeah,
can you
I
hear
can hear
me?
you. I can hear you. I
Okay.
just asked a question. Is it a good
Yeah,
price to
I
buy
heard
or a good
you.
price to sell? Yeah.
Yeah, looking at everything, I think it's a good price to buy, even though it has gone up from 65 to 68. But the only thing I'm looking at here is the issue of the demand and supply that is still persistent in the markets. You know, the issue of demand and
Okay.
supply, the demand is low. And right now, the supply, there's a bit of supply, but the demand is still low. I think it will need a much more higher demand for this market to really move up very well. So there's likelihood that the market may retrace or come down again. So that's my only concern.
Okay, perfect.
Mm.
Who else? I have some good analysts that used to join me here.
Okay.
I think Osinachi too.
All right. Good morning to everyone.
Good morning. Yeah. What's your name, please? PB
Yeah, I'm
Sound.
Peter. Yeah, PB Sound.
Okay.
Yeah. So my own view, I think technically, I think the markets might buy from that spot through the
Okay.
monthly this thing, because it has gotten to the major support points where I think it might likely
Mm-hmm.
go up.
Mm-hmm.
So
Then
that's what.
who else? Okay. For me, I'm of the opinion that it's a good price to buy. To tell you the truth, I've had my first buy, it came down. I had my second buy, it came down. Then I just had my third buy and I'm getting it. Now, some people use breakout strategy, which is another thing I want to show you. How to make profit or when to buy and when to sell. The what is called breakout. We have used it before, but personally, I don't use it much. But it's a good strategy. I think I have to start using that strategy. This breakout strategy talks about when support is broken or resistance is broken, it will go further. And if you have been observing, if you have been in our trading school for almost like a couple of months, you can observe that sometimes when that law occurred, the market moves more. One, that's a breakout. And it happens more on oil. It does not necessarily happen strongly on gold. Gold is not really distant. Now, so you see at this point, support was broken here. So support was broken at 75. That's on Brent. At 75 was when support was broken, and the immediate support was broken. Where did we see the market? The market came down to 71. The same thing too on Brent. I don't know. Okay, I've closed the Brent environment. So if I open the Brent environment, it's the same thing. Immediately that support was broken, the market crashed more. So now, another point where you can buy and sell oil, one is when support is broken or resistance is broken. It has happened before. My friend laughed at me, but I didn't bother. Because I place a sell, I'm a favorite seller. I like to sell more than to buy. So he came and was telling me that this market is going to go up. I think I shared that story before. And it was influenced by my friend who worked in the United States Marine. Was telling me about the strike that is going to happen or that's already happening within the Israel, like Iran strike, part of Israel, something like that. So that it's going to escalate. Because of that, one was telling me to sell, one was telling me to buy, but me, I didn't pay attention to it. So this market broke the resistance and keep rising. It rose to almost 80. That is how it works. So one of the things you take note of here is that when you want to trade on oil, consider breakout. Breakout works very much. It works. If there are 10 breakouts, seven of them will work. One that's a breakout in oil, don't joke with it, especially when it's on long time frame, like 1 week or 1 day time frame. Breakout is when a support is broken or when a resistance is broken. And something is happening. How many of you is noticing this thread? I'm just noticing it now, although I have it on live account anyway. This thread was $600 when we started. I don't know if you noticed that. This thread was $600. Now it has got to $4,300 as we're talking. Probably my own trade is getting too. So now, another time you should buy and sell oil too is at a lower price. The price is relatively low. So we're expecting this market to go to $73 per barrel or even more. We're expecting it to go to 73 or more. Then on the WTI crude, let me bring it again. On WTI, we're expecting WTI to go back to $70 or above $70 per barrel. Yeah, this is WTI. We're expecting it to get to 70 or 71. It's currently at 68 now, to be honest. So basically, if you place a trade using our strategy, we like to encourage stop loss to be at the edge of support, not in between the market. Why would we encourage that? So that it will not be easily hit. So we encourage the stop loss to be at the edge of support. The same thing we did on USDJPY. We are having a bias analysis here for almost like, is it 2 weeks now? We are still strongly insisting that the market will we buy. Although it has not triggered the way we expected, but this analysis is still valid. So here is the area where we suggest our stop loss. Yesterday, it made an attempt to break this support. It made a serious attempt to break the support here, but it did not break it. Look at the point here. This was a very serious attempt to break. Assuming it's broken, probably it may fall down more. That is the same analysis we hold on oil. It's a very simple analysis that you don't need to stress yourself. All we want to encourage you to do is to have a good amount of capital and maintain an appropriate risk. Now, let me give you another insight. For example, the market crashed from here. We place our first sell here. We place one of our sell here. The market crashed from here to about how many pips value here? That's almost like 400 pips. What? Okay, this is daily chart. 66. Okay, yeah, about 400 pips. Yeah, which is not much, and it has created a good opportunity. So this 400 pips now, but let's say you have a good amount of money, or you are trading with 0. Let's say you are trading with 0.05. You most likely have minus 200. Probably if your account is up to 5,000 and you have minus 200, and remember, it's not absolute loss because the market have now rebound. You will only be having minus 200. As the market has rebound, you buy again at this point, then you be gaining from here and also be recovering from the one that you placed at $68 per barrel. It's as simple as that. So when you don't have enough money and a good risk management system, then you'll be struggling. You may think that the market is not good, while it's actually good. That's why we try to avoid too much of speculation in the market if you are trading it. Now, let's go back to the news. I'm open for the patience because it's a life analysis and life trading
Mr.
at the
Uche,
same time.
I want to say something regarding what you said. I think this thing you say, it's mislead some of us. You know, you trade with very big accounts. So if you use this analogy you just used now, for someone that even has a $1,000 account, you get, and I take the first trade, I lose. I take the second trade, I lose. At the end of the day, my balance is going down. It's reducing my opportunity to be able to buy when the price becomes good. Because I've taken 2 trades already. When you said buy, it came down, buy, it came down. And I used a fast stop loss. And as I'm telling you, I don't have money in that account anymore. So I think you using your large portfolio to do this analogy, it doesn't work for people that don't have much money. So I prefer, now, hold on. Now, you know, you dropped again now to this 65. But you didn't notify us to buy. But you bought, you didn't say buy at that point. Because whoever bought at 65 is gaining about 300 pips right now, even with a 0.1. That's $300. But I'm not in the trade currently. And sometimes when I now join the trade, you get the market, maybe a news comes out, something, it starts to come down. So I will miss out from the point where I should gain. I will not still lose again from the up. So for someone like me, it's just unfortunate. I don't know. It's not working out for me. I'm not gaining. I've not been gaining this oil market.
I understand. I understand. See, let's say someone has a $1,000 account, and you know, since pandemic, the average movement of oil has moved between up to 300 to 500 pips. So the maximum I've seen it was around 1,000 pips before it reversed. Let's say average is 500 pips, not 300 pips. It's Euro-US that goes 200 to 300 pips. If you use price action, you could be able to spot that out. Oil does not really go the reverse between 150 or 200. The ones that is a breakout, it goes more further. This happens since pandemic. That's when the market trend changed. Now because of that, let's say now you have your first entry within the support zone. with zero, you have a $1,000 account, you have your first entry within, suppose, let's say you have 0.01. This is how to trade it. Let's say you first, you place, remember, your risk could be 10% or 15% maximum risk, for example. Now, if it's 15% maximum risk, it means $150. So if your risk, your ideal risk is $150, 15% maximum risk. It means if you have a loss of $150 in your portfolio, it has affected your maximum risk. You may choose to stop trading or probably upgrade your portfolio or look for a way to just exit that trade entirely. For me, look at what you should do. If on that ideal risk, you could use 0.01 on your first entry. That's what I used to do. I use 0.01 on my first entry. If I place 0.01 on my first entry, we give 10 cents, 10 cents per movement. Most brokers give 10 cents. Few can give you maybe, most brokers give 10 cents. Yeah, it's only on FS that you can give $1. That 0.01 give you 10 cents. It looks small, but it's actually big. So if the market goes against you like 200 pips, you'll be having minus $20. Am I right? Yeah, because 10 times 10 will give you $1. So you'll be having minus $20. Then if it goes against you 400 pips, which does not happen all the time, that I told you breakout always occur within that 500 to a maximum 1,000. It could be your data analyst and get all these things. I'm telling you. So you'll be having, if you go against the 400 pips, you'll be having only minus $400. Remember, it has created an opportunity for recovery. Once you get to that level, that one have not closed. Remember, and so that's why I emphasize on that. If you place the first trade with that volume, you put your stop loss at an edge of reversal. What I mean by edge is this is a point like this. I understand what you mean, because for me it used to happen to me before I changed that strategy. At an edge, like something like this, at the edge of support, where the support got to and probably reversed. You put a stop loss.
That's the end of the week.
Because yes, at that edge, because sometimes it's always not difficult. It's always difficult for support to break 2 times. It can break, but it's not always all the time. It may come back. Once you get into that support, then it will go back. So I put my stop loss there. I'm putting stop loss not because I wanted to lose. I wanted to like trade so that the market will find it funny to close my trade at loss. Because this market, you can place a trade that may be at loss of 5 months and see later again. That's the truth. A trade can be at loss of 5 good months or 8 months and later again, which is better for you to be long and gain than for you to be short and cut. So you could use that strategy, place your first trade, you're having only minus 40. Remember, your ideal is 150. You actually have about 120, like you can actually trade on. Now, 400 pips is a good time for you to think of placing on that trade. Then in my second trade, I may use 0.2. Sorry, 0.02 or 0.03. I'm playing because that trade I'm placing on 0.03 on a market that has gone 400 pips away. I may have chance of recovery because it will not go additional 400 pips. It may go maybe between 100 again or 80, then I start rebonding. Then I will place it to 0.02 or 0.03. That 0.03 give you about 30 cents. So if you hit 100 pips profit, that would be 30 cents. That would be people who are good at mathematics.
$30 now.
That would be $30. Now the other one has recovered about $10. Because the other one was at loss. That one has recovered about $10. And now, ideally, you'll be having about $40. Then remember, market could go 200 pips. So if the second trade move to 200 pips, you are gaining $60, and the other one you have recovered $20, so you are getting average $80. On this strategy, it will be practically difficult for you to lose out quickly on a breakout market that goes against your position. I understand you, but if you're using a very strict risk reward ratio, like 20 pips against 100 pips, 50 pips against this, and you don't have good amount of capital, you're trading, or you're using a big volume, it will not go well. Yes, your account will be cutting at loss. For example, imagine this market drop. It came down how many days now? It came down about how many days? 1, 2, 3, 4, 5, 6. About 7 or 8 days. It keep coming down, and you have placed a trade more than 3 or 4 times, believing that it will rebound. Yeah, then you may have consistent losses, and of course, you're a human being.
Your balance will just go.
Yes, so use that strategy. That is one of the best strategy I use. And that's one of the reasons why when we change our strategy, we don't necessarily send signal, because those signal does not really work exactly how it ought to be. Somebody was on call with me. That was today. The person may be here. I laughed when he told me that. He said that he follows some influencer that gives signal, that he pay for it, and he can tell me that almost all the signal cut at loss. I said, and for me, I laugh. Sometimes not the fault of those influencers. It could be because that's just what people want, so they're making their money. Trading does not necessarily work like that. That does not always work because of this market wave system. Use that strategy. It will work. It will help you. You will not miss those opportunities again. I understand you. Now, there's another strategy that works. Many people don't necessarily place trade until they have a clear confirmation of reversal. What I mean is something like this. Something like this now is a confirmation of reversal. Something like this now we are having now, it's also a confirmation of reversal. So people like to place trade when they have confirmed uptrend, like buying at 68, setting a stop loss here. Okay, let's do the mathematics now. Let's do this is 68. Let's check the stop loss, where the stop loss will be, so that people can understand clearly. The stop loss, let's say 64.90. Let me know whether I will use a whiteboard. 68 point. The market is 68.61. 68.61. Let's say we place a buy here. Sorry, I'm trying to get here something. Yeah, let's say we place a buy now at 68.61, right? Let's say 68.50. 68.50. That's 68.50. And the market came down to 65.50. So are we going to have like, that would be average. Sorry, I'm coming. You can calculate with me. I'm trying to get the pips value. That would be 68.50 minus 65.50. Okay, that would be 300 pips. Then times 0.01. Then you'll be having minus $30. Maybe so. So even if you use 0.02, you'll be having minus $60 there. Now remember, 65.90, 65.50 is another entry price for buy. Now, using this analysis now, you will find it difficult to have your trade cut at loss when your loss size is very small and their stop loss is wide. Don't understand? So use 0.02 will give you minus $60, 0.01 will give you minus $30. Then at this point, I'm just using in a negative scenario, assuming we play this trade and it came down again. Placing trade now, we put our stop loss here with this thing. We just have only minus 60 on 0.01 or on 0.02. Then when we place another trade here with 0.03 0.03. But if it's me, I may use 0.05 anyway, but let's say 0.03. So 0.03 will not be double of 0.01. That's 1:3. No, 1:2. Then, and the price now move again from this 65. Let me cancel some of these things. Okay, let me write it here. And the price now move again from this 65. We move again 65 back to 68.50 again. So I'll be having a profit of how much now? That's $90 profit, I think. That's so 0.03, 0.03 times, that's 30 cents. So 0.30 times 300. So yes, I'll be having $90 profit. Do you understand? I'll be having $90 profit on the second one. Now remember that this one obviously must have recovered to zero. I mean, my second trade must have recovered to zero. So I will probably be having 90 plus. Yes, obviously, total of $90 profit, and it's difficult for me to lose the money. Then any little movement that goes up again from here, and the market move up to 500 pips away or more than 400 pips in my favor again, I will now gain additional 100 from this $90 I've gained, and gain additional 100 from the 0.01 or 0.02 which have recovered.
Yeah, which cut off at that support level down.
Yes, I remember we didn't place it to cut off. The market just goes down to that point.
Yeah, it went down and took out the stop loss.
No, let's assume it didn't took, or even it took it. Yes, on 2 ways now.
Then you
so
enter again.
Stop loss, yes, I've entered again. Then I've recovered. This is why when we give a signal analysis, we don't necessarily want people to persist. We like people to persist, be on that level. It will cash out, because if you change it, do deposit, the market may reverse going down, going up when you don't even expect it. I have people now who change their mind and start placing a sell. I don't know. Just imagine what their trend will be now. You don't understand? Use that system. You can hardly have your account liquidated, even though you didn't make your desired profit. Your account will be there. I told you, trading is like portfolio management. It will just be like oil well. That account will be revolving. You'll be making profit. So if you want to run the portfolio on value increment, good. If you want to run the portfolio on profit making, good. But you may not have the exact capital you put at all time, but that capital will give you profit.
Okay, in another scenario, 1 minute, in another scenario that it comes down, takes out your stop loss, which is far, then and the market, like the previous one, that there was a breakout and it dropped. So if it goes down further, what do you advise at that point? Should I now change my strategy to sell?
No. Look at what I advise. If market goes like this, you know that here now is a breakout. Here now, you don't understand? It has broken out. So if based on what is happening now, if immediately market breakout here at this point, if you see it, you can sell.
Okay.
Yeah, but I don't advise. I imagine when it has broken out and come down to this point, you now begin to sell. No, because it may reverse. If you see breakout on time, it's good.
Yeah, but if it has already broken out, no need to enter.
Yes, if it has broken out away from the breakout point, there's no need. But if it's within that time, it's good to sell it, because it may have chance of dropping further. Breakout law works in the market. If anytime support is broken, the market may go down further. It's always a reality. Anytime resistance is broken, it may go more up. People that like it can trade it. Personally, as a trader, I don't trade it before, but I'm trying to struggle to buy into that strategy because it actually works.
It works. Yeah. Have you noticed there's a breakout now on this buy? If you check on the lower time frame, 1 hour, I think this should be a break. This is a breakout. If you use the trend line, you draw it down. This sell has broken am I right? think I can see it.
I'm checking the chart again. I'm
There's
checking
a
the chart
breakout
again.
at this point. Let me give you the price. It has
I'm
broken
checking the lower time
the
frame.
61 hour. Check 1 hour. It has broken above
Yes, yeah.
67.97. So you can call this a breakout from the
Yes,
last
it has
high.
broken. Yes, it has broken 67.80.
So
Yeah,
this can
it
be a
has broken
breakout.
67.80. For those of us who may be lost, let's share the screen with you. Look at what she's referring to. Here,
Yeah.
Here is a breakout. You see this point now. This is 1 hour chart. Here is a breakout. You see this point? It's a breakout. So the market has broken it out. Now look at where
Found
it
the
is.
support there.
Sorry?
There is support there.
Not yet.
Yes, it's a resistance. It's a
Okay.
resistance. Yes, it has broken the resistance. And now look at where it is. The same thing happened both on daily chart, on weekly chart, monthly chart. Breakout works. Support and resistance works. You can never be a trader without not knowing them. It's impossible.
Yeah.
But the way you apply them, yes. One as a breakout,
Coach,
if you continue.
sorry to interrupt you. So is it a wise idea, like when we miss an entry on, let's say, the daily time frame, is it a wise idea to go to the lower time frame to look for another entry?
I don't do that, but if you want to do, you can do. For me, I
Mr.
don't think
Uche,
it's a wise one. Wise one can that wise entry can confuse you, but people can use it to know slight movement. The short time frame can be confusing. I draw another line here to avoid confusion, to avoid forgetting it. Sorry, you asked a question, Mrs. Who's talking? Miss Antonia. You see this point now is another breakout. You see this point?
Yeah, the upper one.
68.51. Yeah, nice. So if it's
It goes
broken,
above
expect this market, yes,
to go up.
expect it to start approaching 70.
Yeah.
Do you understand? It's a very simple strategy.
So if I'm not
Expect it to start
comfortable with
approaching
this
70.
first breakout, I can wait for the second one to have a good movement.
Yeah. But also Nigeria asked the question, you know that in market, long time frame give you a very much clearer direction than short time frame.
I don't mean lower time frame like the 15 minutes, because
1
from the
hour.
beginning, I mean, like, if you're doing a daily and you miss a position on the daily, I think if you go down to the 4 hours or 1 hour, you actually understand what's happening in the market.
Yeah, sure. Because of 1 hour and 4 hours tells you what happened per sessions. And that's why sometimes market may be good in morning session and be bad in evening session. So using those 4 hours can help. Sure.
Exactly what I mean. I don't do 15 minutes.
Mr. Uche, I noticed something, or if I go to 1 hour, and 1 hour is showing that the market has oversold, it's coming down. I've observed it. You will check, if you check within the next hour, most times that market will really follow that trend of selling within that hour. Then it will come down. If you check it on 4 hours, 4 hours may be showing that it's down, it wants to go up. If you trade the 4 hour candle, trade for 4 hours, you will observe it has gone up. When you go to 1 day, maybe 1 day is still at the oversold. It has not come up. So somehow the market follows that. If you follow the 1 hour trend, is up, overbought. Within that 1 hour, observe it for the next 1 hour before the next trading session. That market will definitely sell and come down. Have you observed? So I alternate between the 1, 4, and 1 day. It respects it. It comes down, goes up 4 hours, come down again within the day.
Yes. What I'm saying is true. I've quite observed it. Personally, if I'm doing a day trading or weekly trade, if I want to hedge, I use 4 hours to hedge it.
Okay.
Yeah, because the 4 hours can tell me exactly what is happening that hour, why my market is not gaining.
Yes. So if you can just wait and give it some time, within that 4 hours, when it trades, it will give you that direction.
Yeah. Yeah, because 4 hours and 1 hour, mostly 4 hours can signal something strong in the market.
Mm.
Yeah, it can. Do you know that this market we are getting $20, $30? That's where people are making like $1 million per day.
Yeah,
There's a
thousands.
screenshot I will, so all this movement is just that, you know, some of us, it's not our fault. We don't have enough capital on it. All this movement that move like 100 pips
50
per day.
pips. 50 pips
If I tell
alone.
you how much someone has made on it,
$10. It's $500.
yeah, because I have privilege to work with big firm that I know the kind of volume they are controlling. If I tell you how much these things are gained.
Last week, it dawned on me that the major thing in this trading is capital.
It's your lot size, your lot size and your capital. Because you can take only 100 pips for the whole day and you have $1,000 and you close your trade and you go your way. Just one lot. One lot. You trade with one lot, $10, 100 pips, $1,000, and you can close the market and do your other things.
And that is why we try to change our strategy to try to identify spots that can give us money. That's how to make money in this market. Identify some certain level of spots that will give you profit. You trade it, you go away. If you want to trade
just take 100 pips, you're okay.
Yes. You are done in the market. So knowing those spots will easily help you. So in conclusion now, nobody has opposed buy. People are supporting sell. So nobody has opposed buy. People are supporting buy. In conclusion now, we could say that $68 is good to buy oil on Brent, on WTI. Brent could be, it's also, I don't know the price of Brent. If you check the Brent now, you see the price, it's good to also buy it. But now, we could, because of volatility that's happening in the market, I suggest we widen stop loss.
And buy with a small lot.
Yes. Reduce your volume, widen stop loss. Because stop loss is not to be caught, just to you know, I don't put stop loss for market to cut. To be honest, I don't like it to cut.
It always cuts my stop loss. It just makes me so sad.
So now let's widen it. Our stop loss now, as market is at 68, should be anything below 65. So because of that, instead of cutting that, if something happened, market fall back to 300 pips against our entry, as I speak to you, let it not be that we lost much money. Let it be that the loss or the losing trend will also be within our risk. I'll use 0.01 to give you instances. 0.01 give you 10 cents. 0.02 give you 20 cents. 0.03 give you 30 cents. 0.1 give you $1. So if you are using like $5,000 or $10,000 account and use 0.1, if you put 300 pips stop loss, that'll be about $300 exactly. So if your risk is about 10%, which is about $1,000, you are still within your risk. Do you understand? And if market has come back to 65 or 64, it gives you more chance. In a month, if you're able to gain $1,000 to $2,000 from $10,000 account, is a good amount of profit, to be honest. And yet, and now your portfolio is still there running. That $10,000 will keep giving you money. So each trade is supposed to give you minimum $300 to $500 profit on $10,000 account using this measure of risk management. Then on $1,000, each trade is supposed to give you average $50 to $100 account anytime you trade against using this risk management measure. But remember, it must not be getting every week. There are some trade that can keep you on track for a long time. You leave it, but anytime that trade against, you have chance of getting $50 to $100 using this risk management system. And now, on your loss level, you won't be losing much money on your loss level. This is one of the most effective way of managing risk. Any question, those are our new people that are here. You are very quiet. I don't know whether you're observing or you're confused. Which one? Let me know if you have a question. We have Adejo, we have Bewatoso, Sunday, we have Chuku have greeted us. We have Tomato Bay and all of them. So do you have any question regarding this?
Okay.
Thank you, sir.
Can I say okay? All right. Can I say something? Hello, Mr. Uche.
Yes.
Can you hear me? Okay.
Yes, you can. Yeah.
About this market, this chart you just analyze.
Yeah.
So I think the market is about to break a resistance point here. Is it wisely for us to wait for it to break it before entering the trade, or we can enter right now, or we should just confirm if it will break this resistance over here?
For this market, there's no closer support.
Okay.
No closer support. Support is at 65. So for me, it's better you place your buy here. Obviously, it's gonna break. I told you, when the market is buying, to buy for a long time. This market has crashed. This is last quarter of the year, September. Believe me, this market may be on the rise till the end of the year. If the rise started, it can rise for like 1 month or 2 months.
All right, thanks.
How about the US rate cuts? It has not come up yet. The interest rate cuts. Because the speculation now is that the rate cuts will make the market go up. But that one,
it will make the market go up. But most important factor that could have controlled this market is demand and supply.
Is demand and
those
supply.
geopolitical event and production cut. These are the 3 major factors that controls more than the US interest rate. I know that one plays a role, but this is the major factor that push it extremely high. Just that people believe that OPEC is want to start production. That's why the market fall. Just imagine.
It just fell uncontrollably. Like,
yeah,
they kept saying market sentiment. I was trying to understand where the sentiment coming from.
Yeah, because for over a year now, OPEC has cut production, so the market keep rising. They say that the production agreement is supposed to end last month, August. So we're thinking whether they will extend it or not. So there's a speculation that they are not going to extend it. They will start, everybody will start producing. Like in Nigeria is giving another 2 million barrels per day, I think. That's what OPEC gave us. So even if you produce more, that's what you can sell. So now imagine when they said everybody, when they say that the production cut is over, people should start producing as much as you want, then it will overpopulate the market. People started selling on time. Do you understand? So that just the speculative and structure. Now that speculation is triggered based on demand and supply. Check very well. They believe that supply will be much. People that have been buying started selling off. It's also the same thing. Now OPEC have said no, we are not cutting production. We have extended to, I think, to December. Yeah. So now they have started buying again. To understand, price is low. It will trigger demand. All these things are interchanged. A low price will always trigger demand. If price is extremely low, people want to buy it. If price is extremely high, people want to sell it. So that's why we believe that this meeting will make you make a lot of money. We're expecting you to gain at least 300 pips. Even if you dropped, good. We're expecting you to cash out 300 pips from the market. Minimum 300 pips from the market. If you utilize both of them, that's 600 pips. Then if you're using a big volume, you should be able to give you much amount of profit. Remember our analysis on stop loss and drop down, so that you won't put a big volume and have issues. Someone sent us a chat. I read that message. They forwarded it to me. See, there was a analysis we gave. We used 0.1. That the estimated return minimum was 0.1. The person went and used 0.1 and placed a trade. Just because of he saw it. Yeah. Oh. And his account was not big enough. So he pledged. He said that he's still trade anyway, and he's having $600 account. I now say okay, and he blowed his account. I was not saying even if it's 0.01, 200 pips was what the market moved. Sorry, 100 pips was the stop loss. We put an estimated stop loss of 100. That he may end up losing 200. How come you lose 600? The person did not answer the question. Now, 0.1, Yeah, so we will not capture all the lot size. That's why we have done training on lot size management, how you can be able to select a proper lot size. When we are given that analysis, we will not just capture all of them. People trade on different level of lot size, but somebody can now use it based on his account size and implement it. Don't just use the copy and paste on that is there. If your account size is not enough,
Don't be using that big lot size, Mr. Uche. Those lot sizes and the amount in dollars. Of course, everybody wants to make high amount. You can start with the 0.01, and specify that if you have a $1,000 account, you just specify that they should use maybe a small lot. So anybody that now uses a high lot, you are the one risking your accounts. When I see that your 10,000, everybody wants to make 1,000, make 10,000. You may be tempted, you go and put a bigger lot. Market goes down, your account is gone. So I think you can be posting with the smaller.
Oh, that's why we ask people, in case you want to place a trade, let us know. If you are a student, let us know what you are placing so that we'll be able to see the parameters and guide you properly. It's easy to make $10,000, $100,000, $1 million in trade, but it is all based on the capital you are controlling. If your capital is good enough, you'll be able to maximize that potential. If it's not good enough, you may have challenges in maximizing it. Then there's a trade we're expecting here on USJPY. We're expecting a bullish trend on this market. Obviously, it will happen, but we don't know when it's going to happen. Currently now, it's still trending between the same support zone. Here is known as support zone. I'm just digressing from oil this thing because some of us are trading. Here is a support zone. You see here. Here is a support zone. So any of you that's speaking this trade, just be patient enough. You'll be able to cash out. Yeah, you'll be able to cash out in future. You definitely cash out anytime this market trigger. It will be a big amount of profit for you. Yes. I don't know if I have a question. Those who want to join us, who want to learn more about our trading, our school is open. You can join us and learn trading. I opened something here concerning the current. Today is 12. This news came out yesterday. It came out yesterday by September 11th. They say oil price jumped 3% as hurricane takes 65,000 barrels per day offline in the Gulf of Mexico. So I think that natural disaster is one of those events that can impact the price as well. So I think we are trying to begin to see some fundamentals too that can push the price to a very much better height in trading. How many of us want to trade futures? I believe everybody's on commodity and CFD. How many of us has interest in trading futures?
I have, because this CFD has been somehow for me.
Sir, which platform are you using? Mr. Paragon.
Sorry?
I said, what platform are you using for your trading, sir? Thank you for that wonderful section, sir.
We currently use two platforms now. We use GFT and Ava, but they are all the same company. We use this company. Yeah, we use GFT, Ava, and Ava, but they are all the same, so there's no much difference.
Okay.
So it's all about regulation. Okay, sorry, I send it to someone else. Let me send it to everyone. So we use this one or Ava. So now, why we use them? Because we trade directly on exchange. If you not some executions are connected to exchange. That if by tomorrow they shut down, you go to exchange and get your position. That's on futures. So if you want to trade futures, we may have a class. I've given you the theory about future. I wanted to show you the platform, but time won't permit us again. How the future platform works. Let me know if I can be able to get some of them anyway. I'll show you some certain things that you may need to know because you need to understand a little bit difference about it.
So, Uche, trading futures, does it protect, does it limit the amount of losses? Like, with CFD, the volatility you are trading within the market. But with futures, you are buying at a price on a certain date and you're selling at a certain price. Does that help to mitigate and reduce the loss?
To some extent, it does, because CFD, you can have that physical commodity with you, and it's mostly used for hedging. Do you understand? It's mostly used for hedging. So now,
to hedge against a future loss.
yes,
Yeah?
yes. You can use it to hedge.
But not necessarily a very profitable, not for profit.
It's very profitable. In fact, CFD is the major is the main market before futures is the major market before CFDs. Before CFD become popular, because CFD is mostly over the counter, but it's more popular to people because it's accessible. Any broker can give it to you to trade.
Yeah, but with futures, if I'm buying at let's say this 68, and we have a date to say, okay, I'm selling at 75. So that means I have this kind of guarantee, like an assurance that yes, this is my profit from so time to so time. So I think it secures your profit. Does it secure your profit better than CFD?
Yes, that's what I mean. So there's a lock-up price, a particular price that you have locked up. So as you have locked up, that is how it's going to trade until the contract expires. This is futures. This is the site interface on the futures. Then you could see it's connected directly on the exchange. I'm showing you something. I'm opening something for you to see. So you see everything here. You see exchange fee. You see National Futures Association fee, because of everything is connected to the exchange. You don't understand, and you can easily use it on MT5. Then you see different kind of instruments available on the futures. You know that the same thing you trade is the same thing that is tradable there, but on different kind of pattern. Then you see the exchange we are connected to, the exchange. Then so you see CME, you see CME that has all of them. So each instrument, you see where they're coming from. You know that the same thing we are trading, someone can also use it to do gambling. That's all the maintain is a trade is because of the person then gambling with it. But everybody, so this is crude oil is connected from New York exchange, and Brent is also from New York exchange. So this is the exchange Security and Exchange Commission fee. This is National Futures Association fee. So if you're making executions, then from here you could be able to see the market you are trading. When I go to market, the market, you trade more of not just energies, but then you see the required margin you need, overnight margin and day margin available. You can also start trading with small amount of money, so you could lock up a position, and it will be this position is not just being held by GFT. You know what I mean? Someone asked me that question. I don't know who asked that question. What platform? This position now is not held by GFT. It's neither held by maybe Ava. So it's connected to the exchange.
Okay.
So it's not OTC. It's not OTC. Do you understand? So for example, kind of, even though something happened, maybe the company closed, you have a contract load, you could go in there and get your stuff open. So our own is to, this company, their own is to help you connect. They connect it to the global, to the real global market, because it looks like you can't travel there and do it, and they're highly regulated. So you have everything with you. Then you see that the pattern is different. Those of us who want to learn properly how to trade it. That's why you paid for what you paid for. You need to teach you one-on-one for you to understand how you can navigate from CFD to futures, and also trade the market and see how it works. Do you understand?
But when the price drop, like with this crash in oil now, if oil was unable to really gain, because some analysts they wrote that if the WTI goes below the support where it has been 67.91, if it goes lower to 65 and it breaks again, then it will go to 60. So some were analyzing further bearish move. So in a situation like that, where there's the market crashes, will it affect the price, the amounts you are trading on future? Will your price be adjusted? It will be adjusted.
No. It won't be adjusted because you have already locked up a price.
So if I lock up at 75, it crashes to 65, I will still maintain my 75?
Yes, yeah, still holding your position at 75, but when the contract expires, the contract can have an expiring time. Once contract expired, they will check the current price at the expiration date. So if the current price is below that 75 that you lock up, that means you'll be having deficit, that's losses, because you lock up at a higher price and the market has closed down at a lower price. Then, assuming you're taking delivery, you could take your delivery.
Okay.
Or a settlement in cash. So you may have each on the both this thing.
You can be settled in cash at your 75, not at the 60.
Yeah.
So you don't really lose. Okay.
No. If the price has come down below your local price, that means you'll be settled in cash based on the current price where the contract has closed. Yes, unless if there's auto renewal of contract, which is one of the advantage of tech brokers. They can renew your contract automatically, they charge you, they won't close it. Understand?
Okay.
Yes.
But if you need to close, you will close at the new market price, if it's lower or higher.
Yeah, so when there's auto renewal, the contract will continue to the next contract until the market goes up to your desired price. Then you can decide to end it. But where it does not have auto renewal, it means that it has to close automatically.
Close at the.
So the system has really improved that can be automation. Like they can renew contract automatically without you closing. Rather, they charge you.
Yeah.
For it's called contract rollover. Then it can roll over the contract.
Okay. Do
you understand? So it's a very lovely market. If you can, if you understand how it works, it's a very lovely market. If you own an oil company or you want to set up an oil company, you can start from here instead of going to looking for tank farm where you start consulting farm or whatever. Storage.
If you want to go into the oil business.
Yeah. So you could directly start trading from the exchange and you make your money from it. We are here to guide you and teach you on how you can navigate on them and make good amount of profit. That's something I wanted to say that I have skipped my mind. If I remember it, I can tell you. So this is the environment. I can't show you the platform again because our time is running over. If you have any question, those on Facebook, on Instagram, on LinkedIn, on YouTube, if you have any question, you can drop it. I will be able to answer you. And if you want to get on board on our trading school, you are free to join our trading school. The link had been, I think, shared. The admin should share the link to you for those who want to join our trading school. We'll be able to teach you properly and how you can navigate. Remember, it's not just oil you can trade. You can trade a lot of asset classes that's available, including currencies and stuff like that. Yeah, some broker can offer you this kind of services. They cannot. Okay, I was talking about GFT and regulation. So sometimes you may not be able to scale through some KYCs and some client KYCs. So that's why it's easy for you to get onboarded through GFT. Then you can be able to get an account. Now you can even trade your own account directly. I mean, you can trade your own account. There's no issue directly, and you'll be able to have access to the real deal, like to the real market and make your money. So any of us that's interested, you could sign up, go and get everything set up, and we'll be able to guide you to until you become successful. Let me know if I have any further question. Any question?
Did you say you can trade CFD through GFTAva on your own personal account?
Yeah. You cannot trade a personal account through GFTAva.
Because okay.
Yeah, so it's no more 100% automated. You can have a personal
Okay.
account. Alpha have approved it because it was a contention of interest before. So you can be able to have a personalized account now with them and be able
So
to
you can
trade
have
and withdraw.
$2,000 and put 1,000 on the AI
Yes,
hybrid, and you are trading.
yes.
Okay, just like
Yeah, one
Algo
for
did.
you. Yes, so you withdraw your profit, 100% profit is yours. There's no
Okay.
issue.
Okay.
So
And
they've
because we
approved
are
it
coming
now.
through you, we are coming through your school, you said they will not be charging us commission, right?
Yeah. Yes, I
That was
think
what you said.
that
That was
policy
what
is
you
still.
said.
I think that policy is still in force. I have to be sure if it's still in force because they promised us that before. But I think
Yeah.
when promises, no one joined then. So I don't know whether
Okay.
someone said, I already have account with CFD. Will I miss out on GFTAva? No, I don't think you missed out. This is from Instagram. Kakantomo Samuel. I don't think you miss out. So maybe I have to ask. But now the good thing is that Ava have approved people to be able to get access to the market through to their own personal market through CFD. Before they said they should be the one to offer it alone directly to, but everything is connected, so there's no difference. Well, that's the kind of market we're bringing to you guys, so that you'll be able to enjoy the benefits others in across the border country are enjoying and have access to the real deal. No issue, I can tell you. So if you have any question on how to join, or those who join us for free, you should thank those who are here who paid for this thing, because they paid us, but we are giving you the same value free of charge. You should thank them. I can hear Dr. Miss Sonia. Thank Miss Sonia.
Thank you, Miss Sonia.
You're welcome.
So also thank you, Sinachi. We have a lot of paid students that are here. This is the value they are getting. Please, we want you guys to make profit. That's our own aspect of it. Then, and also create a business out of it. That's another way of making money. When you have understanding in the business, you can now sit down and create a business out of these things. There's a lot of money to make.
Just like
Additionally,
you are making.
Additionally, don't be a speculative investor. We have that a lot. I don't know how to change that mentation. So yeah, let's say speculative investor. Some people will start trading. Immediately they just have a loss, they withdraw. They say, no, withdraw. That is not how business is done. Business is done properly when you have a proper setup. Don't be too emotional about it. Yeah.
For the sake of the new people that has just joined there, I don't know. Your approach makes it very simple and easy. I understand your approach takes patience more than anything. Like you can actually wait for days for the right setup to enter. So for the sake of people that just joined, and what is your advice? Because there are so many information out there. You hear ICT, you hear SMT, you hear this one tomorrow. What do you have to say?
My own is stick to the one that is okay for you, the one that works. For me, I form deaf ear in all of these things because I've been a victim of a lot of losses. You know what I mean? So what works for me is what I stick to. Do you understand? Now, those who join new, they have this like zealous man, their spirit is high, their blood, they're hot. They want to do
Yes, so
something and they want to make it, yeah.
on
So
cash
now
out.
I know I understand, because that is the market that they sold to them. It is there in their mind. Me, I was like that before. That to the point, if I'm passing through and see 4-story building, I'll tell myself, I will have this next year. It was really like that. Like, but now you know that is not the reality. So we try to calm the blood down, like subdue that blood, and make sure that they calm down and follow it in a right way, which is our own is one of the best way you can trade and have peace of mind. So that's just our advice. When they come through us, we step them down. But we try to focus more on how they can make profit, because once they make profit, they will stay. Do you understand? We try to find way of giving them profitable trade where they can trade. Some of them will come up, they just want signal, they don't want to hear anything. The signal does not always work, because that signal has to come with a specific point. At that point, there's no guarantee that point will work. What if the thing change? Then the trade court, they now begin to think that this trade signal does not work. So the easiest way that market works is getting an area of entry 1, entry 2, or entry 3. Those areas can work. Signal does not always 100% work the way people think it will
Mr.
work.
Uche, let me chip something for you there. For me, I think I've been here now for a couple of months. When I came, of course, you want to make the money, you see people making the money, and you want to just, maybe he's saying use a 0.01. And you're telling yourself, when will I ever make the money that can be reasonable? You get, and you just say, oh, let me just increase it myself to 0.1. 0.1 just messes you up. For me, I've learned in a very hard way. I'm trying to like reset and try and be patient with this trading. I don't know about Sinachi, if you have traded and if you have lost half of what I have lost.
I've blown a $1,000 account in 2 weeks.
My 3,000 account blew in one day. Another 6,000. Uche knows now. 6,000, 5,000, 4,000. I have blown a lot of money in this thing. I'm not giving up. So my advice for people coming in, Uche, you're doing a good job, you're trying, but I want you to emphasize a lot for the people coming in. They need to take it easy, they need to calm down. And they should not put so much money at a time, like I did. I was using 5,000, 3,000, 4,000. If it blew, I'll put again. So I think I will advise them, if they are listening, they need to calm down. You need a good level of understanding. Even if future gives you a signal and you don't understand what you are doing, you will still lose your money. Future will make money, you will lose money. So a good level of understanding, a good level of understanding, and they should not start with so much money. You get, because it's a learning phase. Let them be making that $0.1, $1, $2, $5 highest. Don't be in a rush to make $100. You get.
The problem is that some people that may want to start with small money want to make big money. That's always the problem. Yeah, for example, somebody was discussing with me, he wants to start with $100. And he started with $100 and make, is this $15? And was within a month and was annoyed. This the whole thing is 15. I told him this 15%. He said, he was expecting 250, 300.
No.
Now, but somebody that has $1,000, that's $150 for him. Somebody that has $10,000, that's $1,500 for him. So now, people with small money does not see the value of that small one that's added. That's what they want to increase it. So what I used to advise people, when you come in, set up a portfolio. I have somebody that will guide you on that portfolio, let it grow. Or just as you said, if you don't want to start a portfolio, start with a little amount and use it to test the market. Yes,
maximum $500.
As testing the market, don't focus on how you can just gain 100% because you heard about it on maybe someone told you like that. You focus on how you can understand the dynamics of the market. 2 things that make you successful as a trader is: one, if you trade not to lose your capital, you're successful. And
that is the most important thing.
So these 2 things make a successful investor: security or risk management and profit making. So now, if you make profit tomorrow and blow our account next tomorrow,
you can't trade again.
Yes. Yeah, but where you're managing your risk at the end of the day, you become successful. Because tomorrow, some of you may start trading for companies. Are you going to blow the account? You may end up in prison.
Mhm.
So what you will do with them is when they give you portfolio, they set up the risk management system. You have to follow those risk management system. Yes, there are some automation that can help you not to exceed them, even though emotion can't allow it to cut, such as stop loss. Some of them have a high level of margin stop out, like GFT hardly lose money. They can only stop out. But if you put account on Ava Direct, you may lose it to zero because broker doesn't give you that access to have those stop out. GFT has a high level of stop out. So now that now will make you, as if you're trading for company, even though if you don't want to follow their system, the system will cut you off. Now that now helps you to be a very good trader where you're able to manage your risk, then you're able to make profit. Because in the market, not all the market conditions fit your strategy. That's the truth. Personally, I'm not a breakout guy. If market is breaking out, it's difficult for me to catch it. Because I always think that it's to reverse. What if I enter to reverse? Yeah, I trade mostly low and high, support and resistance. Then focus on news as well. These are the things I trade. Breakout is not my thing, but I'm trying to add it to know whether I can diversify more. Somebody, if you give me analysis to make on breakout, I may end up having stop loss, because that's not my strategy. Someone else is maybe his strategy. Okay,
Yeah.
it's been a very
You know,
wonderful time.
Kochi,
Okay.
thing that you mentioned your strategy now, like expressly, because in the couple of months, I had to book a special section with you just on your strategy.
Mm-hmm.
So it's a good thing that you
Mm-hmm.
mentioned it now, and everybody will know that this is the strategy we're training on.
Yes, yes.
Because a friend of mine was telling me about smart money traders and all that, and when he opened it, all I could see his fair value gap on the higher time frame. Take it to the lower time frame is support and resistance. Like everything I was seeing is just support and resistance. So I think going forward it's very important that you help us, know how well to identify these areas, because a lot of us are
Yes.
still struggling.
Yes.
A lot of us are still struggling. Like,
Now, that is what.
hold on, for me,
Okay.
I am still struggling even after our one-on-one section. But the good thing is most times I don't trade the daily candle like you. I trade mainly 1 hour. So most times I find the range and stay in the range, 1 hour candle.
Okay.
So I don't know, you need to help us, like let's know how to easily identify and mark it out.
Yes, how to easily identify that is we keep learning or to stick to our head. That's what is called advanced. Advanced is doing the same thing you did on beginner's class, but on more emphasized level, until you're able to stop it, to spot it out perfectly.
And master
So
it.
if you want, yeah, so if you want more, you are always open to have another section, personalized section all the time. There's different types of support and resistance level. That what is called support zone and resistance zone. That what we call single support, single resistance. Do you understand? So keep noticing them on different type of instrument. One, you may use more than one instrument to study it. You may use up to 4 different kind of instruments to study those support and resistance. Apart from spotting them as technical, also try to read them more fundamentally, try to understand how they works. There's also like reversal area. It's not exactly like support and resistance. So all these things is what you keep learning until you're able to now become a master. From master, you become maybe a professor, become advanced. That if you look at the platform, you already know where it is.
You know.
Yes. So that's why beginners, we just do beginner, and the just is complex. They're left.
That
They're not able
beginning
to advance
stage,
more.
we don't really understand
Yes,
that
yes.
support and resistance, all those
Yeah.
things.
Somebody
Don't
say, is it
understand.
advisable to look out for returns on the breakout before? What is
Thank
retrace?
you,
Okay, yeah,
Mr.
yeah.
Tara.
Okay, yeah. You can look for a retracement on it. Yeah. Once
I just want to advise
a
some
market
of
is
my
breakout,
colleagues, sir.
you can look for a retracement.
Hello,
Sorry?
sir. I just want to
Yeah.
advise for people, there's a need for you to even diversify your fund. At least not just only in forex market alone. At least have a very stable market whereby your market, you can grow your capital and then bring into forex, not your real capital to forex market while you are learning. At times, it can get you that you will not even have any capital again to. So what I advise is that, like me now, I'm a broker now. I invest in a lot of other instruments, like Nigerian stock now. Some of them are doing for $1 now. At least any profit I make from there, I put it now into forex. So it will not really, I'm not that intense or under panic. So I can be calm and then understand the market, because I'm not really using my capital. It's just, again, I'm using to invest on the forex market. So we need to be very careful. Let us learn on that market, and the profit you have from there, you cannot bring it, and then you grow your money. That will also help than you now losing your capital and then that panic.
Yes, you are right. That's why we teach broadly on all this, so that the student can know more and understand how they work. Diversification is one of the strategy that can help you to mitigate risk. Like if you check our website, we have all the courses. Unfortunately, not everybody wants to subscribe to some of them, because this one has been popular. So we teach equity. Look at it, equity investing. So now, where we let people know much about how they can not just focus on leverage product or margin product, you can be able to understand how equity market works. We did on spot. I have a lot of position on spot. Even the gold we trade here, I trade on spot. I have gold reserve in the bank, but trade through an exchange. They are spot. Then you can also trade on real equity, where you can buy some certain level of shares. I just asked my friend, just said, "What's your name? How do you pronounce your name?" Amos, or something. Let me just Sunday Amos. Yeah, just said. So you can be able to diversify those instruments. Something just entered my mind. I wanted to say when Sonia was saying something. Now it has entered my mind when you were asking me question concerning the futures. Now you know that in the future, without leverage, you trade on it based on price. As the price of oil came down from 71 to 65, that is an average $6 loss. So now those who are on spot just have only $6 negative, but it will be multiplied by how many contracts they are holding. Do you understand? Why? Those of us who trade on margin, each price movement count. So that will be about 600 pips. It will multiply by how many volume or losses we are using. That's what was in my mind. I want to tell you that keep coming, that I keep thinking about. Yeah. So now
multiply by your position.
Yes. So it is multiplied by whatever you are trading. For example, the equities, this I'm also that just made me to understand, to remember what I wanted to say. So on equity investing, it's not done on leverage or margin, it's done on price or unit. So let's say now you own a share, probably on Nigerian Stock Exchange or any of the exchange, through any of the brokers, because we have a local broker you can work with. You can buy directly share with them. They are our partner. So now, so if you sign up with them and buy the share there is based on price and per unit. It's not based on leverage or margin. So if the price you probably bought, let's say at $1, the price of the share moves to $5. That's $3 profit, or a $3 increment. Then $3 multiplied by how many units of shares that you are holding. But on margin trading, that will be about 300 pips, because it takes 199 cents to get up to $1. So each movement will count. While there, it will be 300. So 300, it will be $3. $3 multiplied by how many units of shares that you are holding. If you're holding multiple units, then you have made more big profit. You don't understand? Then assuming the price dropped, it's also going to drop based on the price and multiplied by how many units that you are holding. Yes, that's how it works on the stock market. It's a very wonderful market if you know how to trade it. And again, if you know how to trade on all of them, it can be able to make standard analysis and tell your broker the exact time to buy that particular shares or that particular this thing. For example, when I'm trading on spot, I trade on maize, on commodities, and I trade on gold. I also try to trade on ginger. Now, when I check the price, the market price, the market chart from the global market, I can easily predict when I should be able to place an order for trainers to buy the spot or to sell it off. It's as simple as that. Last time I made profit on maize because I saw that the price has gone down. So on soya bean, because I saw that the price has really gone down here. It has gone down seriously on the market chart. Then I quickly go to the exchange, saw that the price was also relatively down. I have to buy more unit. Then the price surge here. As the price surge here, I know that the price has also surged on the spot market. I go to the spot market, you see, everything corresponds. Then I cash out. That was almost like 170 million. So it's as simple as that. So learning from our school, we give you broad understanding about how these things works and how you can be able to navigate and make good decision of your trading and diversify your portfolios. This is 12 o'clock, no break today. So we have spent 2 hours of your time on this matter. And I believe we get value from the teaching. I get value from the analysis. We did not call any trade today. Okay, we call a trade. Trade today is that we are emphasizing more on buying of the oil instrument. Please, this video is recorded. In case you miss out anything, then we will share it with you. Then you can watch it over and over again. It's also on our YouTube, automatically on our YouTube. You can watch it now or before today will be over and get some certain information. If you have any question, be free to answer you on our, of our phone number here. You can chat any of this phone number that display on our site. Then we can reach out to you and answer your question. If you want to join our trading school, you're open.
Okay. When you are done, when you are done, I want an understand. I want to understand these futures trading on spot. I spoke to you about that ginger before. So you find out maybe a time where you can book, if it's a class or if it's just a one-on-one, so that I can have a better understanding and look at investing in that too.
Well, fine. I'll be happy to get you on board because we have order from exchange, almost $4 million order. So we're even looking for how to convert it. So it's a very active market that has many active investors. Spot is good, CF is good, derivative is good, just that they are not the same pattern. So I will book a session with you. Remind us on our WhatsApp. So I'll book a special session with you and I'll let you know much on that. Okay. It falls under our spot. It's fall under our spot education, trading you on spot. That's where and you paid for it. We have to teach you. Right. Okay. Thank you so much, everyone. Do have a lovely day.
You too, sir.
Profitable week.
And a profitable week, yeah.
Yeah. Good afternoon, Mr. Uche.
Thank you. Good afternoon.
Hello, sir.
Okay.
Yes, yeah. I have not been around for a while, sir. I traveled home.
We have just closed. I'm sorry, we have just closed. So
I understand.
Send us a chat. Send us a chat because I don't want to see their time. It's recorded.
Okay.
Just send us a chat immediately, then we'll be able to attend to you. I'll be available on chat to next 2 hours.
Okay, sir. Okay, sir.
Okay. Thank you.